Welcome. In this video, where will Xcn coin price go up? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Taking a careful look at the chart, we can see that the price managed to break through a certain resistance level on the upside in the recent past. This resistance was a barrier that could not be crossed in previous attempts, making it difficult for buyers. However, with the recent bullish momentum, this level was broken to the upside, and the price is now priced above this level. This breakout is a very important development in terms of technical analysis, because this area, which previously worked as resistance, may now turn into a potential support. However, even though the price action is on the upside, there seems to be some retracement happening at the moment. With this pullback, price is heading towards the green area at the bottom of the chart, which is carefully marked as a potential new support area. This green box was an important area where the price received support in previous timeframes and buyers re-engaged. Therefore, it is quite possible that we may see a buying reaction if the price touches here. Such areas are often referred to as liquidity zones or demand pools, because the price had previously encountered strong buying reactions from these areas and started a bullish movement. A similar scenario could happen now. When the price reaches this level, it is technically possible that there will be an upward reaction as buyers reactivate, meaning that the price will move upwards again. In addition, the fact that the movement towards this zone is not very sharp, but rather controlled and volume-free, is another detail that strengthens the possibility of an upward return from this level. If the price gets support from this green zone and starts bouncing upwards from here, this would be a strong technical confirmation and an important signal that the uptrend will continue in the short term. As a result, the price seems to have said goodbye to the level that previously worked as a strong resistance. The corrective move towards this green support box at the bottom may also indicate that the technical structure is in a healthy bullish pattern. If the price makes an upward bounce with a buying reaction from this level, the market may regain a positive sentiment, and new highs may be tested. But we can't decide the analysis with only the supports. Let's look at the other metrics. Stay tuned. When we carefully examine the chart, we can clearly see that the price action is trapped within a certain structure. This structure is the descending wedge pattern, which is often encountered in technical analysis, and shows that the price is searching for a direction by moving within a narrow band within a certain time interval. This type of pattern generally exhibits a structure of falling highs and lows that compresses and narrows over time. That is, each new high is lower than the previous one, while the lows gradually fall, but these declines slow down over time, and eventually a moment of decision is approached. A descending wedge pattern is usually formed towards the end of a retracement, when it becomes clear that market participants no longer have an appetite for further declines. As the price moves within this compression structure, the volume usually decreases, and the market prepares for a breakout to determine a direction. This is where a critical aspect of this pattern comes into play. Descending wedges often carry the potential for an upside breakout. In other words, according to the technical literature, this pattern is generally considered a trend reversal pattern, and the chances of an upside breakout are quite high. On the current chart, this descending wedge is clearly visible. The price has fluctuated within this structure for some time, meaning that it has moved back and forth between the support and resistance lines within this wedge. Although it looks bearish, this structure actually has the potential to create a bull trap, because from the outside, it may look like a downtrend. But when the end of this squeeze structure is near, investors should be careful. In particular, it is very important how the price reacts to the upper band of the wedge. If an upside breakout occurs, this can often signal the beginning of a rally. In addition, the breakout of this pattern is often accompanied by an increase in volume. So if the price not only crosses the line but also makes a breakout supported by volume, this gives an even stronger buy signal. Therefore, when the breakout occurs, the so-called post-breakout retest should also be followed. If the price breaks the wedge on an upside breakout and then retraces back to test the broken line and bounces off it to continue its upward movement, this is a confirmation of the pattern and offers a safer trading area in terms of risk management. On the other hand, the target levels of wedge patterns are usually measured by the potential for an upside move equal to the height of the pattern at its widest point. In this case, a rise in the vertical distance from the lower boundary to the upper boundary of the wedge structure can be expected after the breakout. This target zone is often important for identifying areas where traders can take profit realizations. All things considered, this descending wedge pattern can be both a harbinger of a potential bullish move and a critical technical structure to make sense of the current price situation. At this point, One of the most important elements that traders should pay attention to is the breakout direction and the severity of the breakout. So if the price breaks the upper line of the wedge pattern on strong volume and then tests this area as support, it may make technical sense to open a buy position. In conclusion, the descending wedge pattern, which is clearly visible on the chart, could herald a serious breakout in price action in the near future. A breakout to the upside could be the beginning of not only a short-term, but also a medium-term uptrend. We should patiently wait for the breakout. A close examination of the chart shows that there is a very noticeable and pronounced downtrend on the RSI. This trend has formed over time, with the peaks of the RSI each time being lower than the previous one, resulting in a classic falling trend line. Such a pattern in the RSI is often observed in technical analysis and provides critical signals to traders. When the RSI is moving in a downtrend, it indicates that market momentum is weakening and buyers have not yet gained the upper hand. This pattern usually indicates that selling pressure is still present in the market and buying power is not active enough. At the moment, the RSI indicator is very close to this falling trend line. This means that technically, a very important zone has been reached. This is because there is a possibility that the RSI may break this falling trend line, and if this breakout occurs, the market may experience a serious change in direction. Since indicators that measure momentum, such as the RSI, often signal before price movements, a break in the RSI can be a harbinger of a possible break in price. So when the RSI breaks its downtrend to the upside, it's a technical warning that a bullish move in price is likely to begin. When such downtrend breakouts are seen on the RSI, we can understand that the psychology of market participants is slowly starting to change. The previous series of lower highs and lower lows are now candidates to be broken. If the RSI breaks this falling trend line clearly and decisively to the upside, this would indicate that buyers are gaining strength and sellers are starting to weaken. In such a situation, it is quite common for the price to also break its downtrend and make an upward move. RSI breaking above 50 further confirms this breakout and becomes an important sign of bullish persistence. Another critical detail here is how the RSI breakout will occur. If this breakout is accompanied by high volume, this is considered a much stronger technical signal. If the RSI makes a sharp upside breakout from this level, it means that the price can break the resistance levels with strong buying. Especially if this breakout comes from a line that the RSI has turned around many times before, that is breaking a falling trend line with 3-4 contacts. This breakout becomes much more meaningful. This is because it may indicate that the long-standing momentum weakness is coming to an end and a new era is beginning. In addition, such RSI breakouts are often an opportunity for medium and long-term traders. This is because such structures are technically as strong as a reversal pattern. When the RSI breaks, there's a high probability that a similar breakout will occur in the price, and after this breakout, the price usually starts making new higher highs. This process can continue with the price testing resistances that it has not broken through before and then breaking above these levels. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.